Welcome back, everybody. We're going to do our usual daily recap on our gold, Bitcoin, EuroDollar pairs. We're going to start and we're going to be fairly quick on gold. We were expecting, um, we are still in a high time frame range. This morning here, 7 um, 7 a.m. from the morning analysis. We were expecting price either going to 1820 and then getting rejected, or as you can see from the already marked and chart up um, price sensitivity area, bounce off. As you can see, if you remove the pre-chart, you see that price reacted as these previous price sensitivity areas. This is a key level, also reacted on the yesterday morning. As you can see, we are still in a high time frame range and expecting to be like this with some moves due to the unemployment claims, but until NFP, which will probably give either a push up or strength to the dollar on the downside against the gold. But let's jump on the 1 minute into our usual price action analysis. Of course, correlated also with the news report. Today we had the ADP private sector unemployment, new jobs creation, sort of labor market report. So we're starting from the morning, pre-London, not much action, reacting more or less at these previous highs, 1817, dipping below, so our usual failure to break candle, giving us some bearish impulsive breaking below the key level, then dipping a little bit above again, but failing to make new highs, and then an impulsive move below 1812.5 key level. From there, we see price started creating another block below exactly, if you see, is exactly the same level below 1812.5 with a breakout, retest of these exact same highs, and then continuation up. Retest on the dot of the key level, giving you the chance of entry if you miss the high risk reward entry, and for a quick scalp. So this will be a high risk reward entry above the order block, of course, retest of order block, safer entry, of course, with the retest of the key level instead. Okay, let's see. We find something. Yes, we sort of reacted at these previous lows, sort of. Okay, but then we started ranging, create a double top, revisiting 1812.5 key level, but with no clear direction. Again, retesting these previous highs, failing to break above, dipping below, and retesting the key level. This is an entry that I took for quick 10 pips, but still failing to make significant new lows, if you see on the left hand side. And from there we see bounce, of course. At 2:15 we had news. We had here ADP private sector showing worse figures than expected, and then figures, which was here around this time. There you go. And then you can see, of course, bad figures in the labor market are showing very, very, very bullish, are being very, very bullish for gold, because it's every bad news regarding the labor market, it's delaying the taper. So you could have got two entries here, the safer one above these previous highs on the left hand side, and the high risk reward above these previous highs. They were fairly easy to spot during the live session. Entry, because they were not very impulsive. You can see there were creation of an order block failing to break below, safer entry above these previous highs, and then continuation up, as you can see, break and retest of the price sensitivity area to then make new highs. Here, safest entry. There you go. Okay, as you can see now, what we were expecting here is something that happens a lot on gold, is when there's the NFP at the end of the week, or there's a big event at the end of the week, and we are now retesting the previous highs, but there's no fundamental reasons for price to very aggressively continue up in a bullish trend. You can expect very strong rejections. And this is what I was expecting here. As you can see, high risk reward sells a rejection, especially if the price goes there without any fundamental confirm. And you might say, yeah, ADP figures is a fundamental confirm. No, because it's the private sector. While at the end of the week, we have the official government figures. So this, when the price was here, it was actually during the live stream. I said, okay, I will probably pull a Daniel, which is a counter trend, high risk reward sells. But this was actually very, very good because we had a break, a retest on the dot of these previous lows. Here is sort of messy, but you see it. And then very, very aggressive move down, reacting exactly, as you can see, exactly at these previous lows, but giving you a lot of like 60 pips in a matter of 5-6 minutes, reacting at these previous lows again, bouncing back up to almost correct the entire move again, but reacting at this price sensitivity area 1817 that was already charted, and failing to break above. As you can see, no clear break above, giving you an opportunity to re-enter, sells, very, very aggressive move. These are like 20-30 pips candles. Each candle is 20 pips at least, but then we started ranging, close above the key level, immediately corrected, London close, we dip a little bit below, but the same theory that is for the rejection at the 1820 stands for the rejection at the lows. As you can see here, this is the high time frame range. So it dipped 18.8, sort of the same. So that's why we want to play it into this range, not expecting price to make these sells yet. If we are not, we don't have the confirms of a strong dollar yet, and that's why you see immediate strong reaction. You see some reaction here, these previous lows, break, retest, again, creating a higher low, giving you a safer entry, and then continuation up to make another attempt to break 1817, continuing to range then, as you can see, between these levels. Of course, on gold, these are 50 pips level ranges, which can be traded in between. Of course, giving you a safer entry below these previous lows. Let me mark that up. For another quick scalp, failing again to break below 1812.5. As you can see, volume after London close and coming towards the end of New York, the volume is very, very low. Every bounce is very small. There's not this momentum yet again anymore. Let me just fix this. Yeah, this was very aggressive, but was not untradeable. I gotta be honest. I usually might say that, oh no, it was too aggressive. This time, after all the times that I'm starting to see it, it was almost predictable. And actually, I expected from the morning. This was like 20 pips. Safer entry above the key level. Something else I'm missing. Here, exactly failure to break plus rejection at intraday highs plus no fundamental confirms NFP Friday. Okay, giving you the cells. There you go. Okay, so this was gold. Okay, we're going to do now Bitcoin. This was my morning analysis was here, expecting price to still create a wedge. And I actually expected, it's for the first time that I try to see a wedge on a Bitcoin. Was expecting price to get a little smaller and smaller, like happens on gold sometimes before a big news. But it actually, as you can see, yeah, it respected it because you got the rejection exactly and the price level that I wanted. But you felt very short, fell very short, and got a squeeze out of the wedge very, very quickly. I would expect this, another top, and then up. Instead, you got really aggressively bullish already today. Let's go on the 1 minute to see. Of course, it's sort of a messy chart. a small chart, sorry, because it's very high range. If we let us say the range, it's 180 pips move, so not a small moves. So we're starting from the morning, pre-London, it was on open, reacting at the PPL 3750, 500, dipping a little bit below. Still, as you can see, multiple rejections at the price sensitivity area / psychological price level 47,500, reacting these previous lows that are the lows that we have been respecting for days. And as you can see, we start having, again, this might be still be continuing ranging, but as you can see, we have a very nice aggressive bullish candle here, immediately corrected by like 5 minutes. But as you can see, you have many opportunities to enter. You have here retest of these previous highs, bullish candle, retest of the PPL here, you have 20 pips move, back to break even, never breaking below the PPL again, and then very small, but still giving you 30 pips scalps above the PPL, giving you a entry, safe entry. There you go. Then, if you're still maintaining the same bias, you see, yes, we react, yes, we have a pullback, but still create a double bottom, and then continuation up. First, we fail to break these highs, get a rejection, but as you can see, the pullback is very short, not failing to break above these previous highs. And then trying to make a new high, dipping a little bit below, sort of very rangy. All towards New York, not much action, not a clear trend above the price sensitivity area or rejection of the PPL. Here we have bounce of the dip below the PPL, but still without giving clear direction. Of course, this is great if you want to scalp at 20 pips, but since the spread is always sort of 2, 3, 4 pips, it's not easy to scalp it. And as you can see now, we're creating a double bottom. What is that? Okay, we're starting to create a double bottom at a sensitivity area. As you can see, 1 and 2, exactly on the dot, very clean. One first leg, second leg, and from there, if you enter at the high risk reward entry, you're never getting, not even at break even, Yes, it's creating another block for almost an hour, but then you see that buyers are getting into control, creating new higher highs and higher lows, failing to break below these previous lows, which means that the market structure is still intact. You have here so the high risk reward entry, and then you see very strong impulsive action, giving a perfect retest out of these like 50 pips. You retested exactly the PPL, and again reacting at the next PPL after other 50 pips, failing to break. Then again, as you can see here, we have reaction at these previous highs, but when you manage to break above, you get a retest not of the key level, but of exactly the same highs, giving you another possible entry. Bounce back, never breaking below the key level, and giving you the last spike up above after almost 200 pips, 180 pips of bullish trend, sort of late. Medium risk entry here when price is failing to break, safer entry at the PPL, safest entry not breaking below. From there we see very strong reaction, again failing to break below the key level multiple times here, causing reaction. Now you see smaller and smaller candles, a break as you can here if you're still looking for trades, but as you can see it's much less volume. You have a break and a retest of the key level, break, retest of these previous lows, these previous highs, sorry, on the left hand side, which was which created a price sensitivity area on the lower time frame, and then giving you a safer entry again below the PPL, and then to the down to the PPL 14, causing a reaction again in this PPL. So you can have risk reward entry at key level, safer entry at PPL, and then that's it. So this is it for Bitcoin. Let's go and move on EuroDollar. There we go. For EuroDollar, more or less is the same analysis as per gold, since in this period we are playing against the weakness or the strength of the dollar currency. We are looking at the report on labor market regarding the strength that might result in tapering in this rate talks, which might result in depreciation of or appreciation of the currency. As you can see here in the morning, we're expecting already a bounce from these lows and a risk reward buys. As you can see, there were more the buys from each of these previous price sensitivity area and just a few sells. We were expecting much. The bias was buys. As you can see, we got very nice buys, like 50 pips, which is a lot in a currency. As you can see on the 1 minute here, there you go. We were coming from some highs, reacting at this price sensitivity area, reacting again, making a double bottom at this PSA, 8 a.m. on the dot, reacting at the PSA, and then we had liquidity grab. Let me show you what we had this time. The retail sales, and this was at 8 a.m. Sorry, so this was here that gave the push back bearish due to the weak, very weak retail sales of the Germany. While at 11 we had the unemployment, and at 10 we have 9, 15, 9 till 10 we had the PMIs. So that's why we had these whipsaws. At the end of the day, we went back into the range, and here we started making new highs. As you can see, consistently new highs. We are very impulsive, but anyway, almost always, you have a retest and then continuation up. Tac, tac. When price fails to break below multiple times, you can expect it. Giving you here a nice bullish trend, safer entry. Let's see how price reacted here after this rejection and this intraday highs. We had a bounce from these previous lows, but then we see that sellers are in control after price is failing to make new highs, retesting the price sensitivity area at the opposite side, and then dipping a little bit below, reacting exactly at these previous lows. When I say everything is in the chart, I mean it. But as you can see, this was another high risk, high reward entry, very high risk entry. Give me your safer entry. Of course, this was pre-planned. The buys above 1.1820. Give you very impulsive, but as you can see, always get a retest of the price sensitivity area. Since then, just price retesting these previous highs, continuation up, reacting at the key level, sort of failing to break. But as you can see, there's no clean action and a shift in market structure, because you see the block is still getting higher lows and higher highs. So you can still consider it bullish. There you go. Break and retest, as you can see, exactly on the dot, break retest of the key level, continuation up. For like, let's see, almost 10 pips. If you didn't enter here, entry. And then you see a huge rejection, and you see here price failing to make new highs, reacting at the key level. But look exactly where this very aggressive bearish correction ended. Exactly here at these previous lows. So it's everything you need to know as a scalper, it's in the chart. The more you have apart from that, so the fundamentals, the technical analysis, everything is just on top, just more. You have another break and retest, continuation up, order block being created at these previous highs on the left hand side. Here, and when you see that price is breaking very impulsively above, you have a retest, still creating new lows, and then you have the spike up to new high, giving you a risk reward entry, medium risk entry. Okay, let's continue. Let's go on the, you see the reaction. Look at the reaction. Where did it go? Where did it stop? The correction. Exactly these previous highs. Exactly. And then failing to make a new high. Failure to break. Yeah, it dips a little bit below, but still then closes in case another block above. Again, fails to break. There you go. And since then, you see that after creating a top resistance here, failing to break multiple times, you have a deeper correction with multiple pullbacks, reacting again in this order block price sensitivity area, continuation down until you have the reaction at the key level. But as you can see, we are not creating new highs. We're not making break retest of these previous highs up, break and retest of these previous highs up. It's not the action that we are seeing. We are seeing just very small bullish and very small bearish. And then only a few minutes ago, we got the break and retest below the key level. And there you go. And this was US Euro Dollar. See you tomorrow, guys.